Welcome back to Corralling the Chaos. Today, we're going to talk about money, which is always a fun topic. At the end of the day, you help to produce a great event, and you obviously want to get paid for it, but it doesn't stop there. So in addition to receiving the payment, event companies are also looking for ways to give your client a good experience, minimize your risk of the transaction, and of course, trying to receive funds as soon as possible to not negatively impact your cash flow. So today we're going to dive into embedded payments. And to help us do that, we have asked Casey Kipfer, CFO of JustiFi, to join us. So welcome, Casey, and thanks for helping us unpack this today.
Yeah, absolutely. Thank you, Angela. It's great to be here and looking forward to the conversation.
Great. Well, before we dive in, tell us a little bit about JustiFi.
Here at JustiFi, we build financial infrastructure specifically for platforms. And so, what we are really looking to do is harness and provide the tools that kind of drive the economy on the internet and around vertical SaaS platforms, but to do it in a way that is completely embedded within that platform. And that provides a host of advantages, of course, to the software, as well as to the users of the software, whether that be the typically small, medium, or sometimes large businesses that are using the vertical SaaS platform itself. And of course, the customers who are interacting with that technology and certainly with that business in some way as well. And so from our lens, we think that, certainly the experience for all of the parties involved is critical in, really kind of harnessing the power of what can be achieved. And so we certainly sit in the back, but we know that this is mission critical in the same way that, say, like AWS or something like that is mission critical for a platform and their customers as well.
So payments is a more convoluted world than I realized when we first started talking about embedding payments into LASSO's platform. So talk to us about what is the true difference between an embedded payment platform and just a payment processor?
Yeah, for sure. So, I think the first difference is where those interactions are happening from, say, a merchant or a payer perspective, right? An embedded solution is entirely within the vertical SaaS platform. That's where these small businesses or potentially like their customers are operating on a daily or hourly basis, right? It's where they live. And so, by embedding those different kind of tasks or operations into that flow, it makes it a lot more efficient for people, and you can automate things in a way that you otherwise would kind of struggle to do. So certainly there is the payment or the financial transactions that are occurring, but there's a host of other related activity that is happening before or potentially after the transaction as well. And so it's really easy to connect that together within a vertical SaaS environment. It's much harder to do that if you have, say, a separate, invoicing tool, a separate payment tool, a separate accounting system, and so on and so forth, right? So we're really looking to streamline those operations together, us and the vertical SaaS platform. It's really through their system, but to do it in a way that provides, all of the features and functionality, whether we are talking about, payments or another financial product, but to include that or to make that available within the existing interfaces and user flows that the vertical SaaS platform has spent a lot of time honing and perfecting for that specific vertical, right? And so we kind of joke about this, but I think it's true. Most small businesses don't love their payment processor. They may not love their banking partner. They may not love, some of the other folks that they use for either, say, invoice factoring or different types of loans or whatever it might be. But they do love their vertical SaaS platform, and there's a reason for that, right? It was made specifically for them. So the more contextual, the more kind of dialed for that, vertical, for that market, for that type of business, the better it is for everybody.
That makes sense. So it's kind of like giving context to the payment while you're within the event, while you're within the client. It connects all of those things versus running a standalone invoice, a standalone payment, collecting that payment, and then trying to attribute it to the right event, the right client. Instead, it all being embedded, much fewer steps to have to do that.
Yeah, absolutely. I mean, from a time perspective, what we think about from like end to end is oftentimes, the best vertical SaaS can take something that takes certainly minutes, if not hours, and bring it down to, seconds or immediate, right? And that's amazing.
Seems like there's a lot of movement within the FinTech space. Obviously, payments, cash is king, always has been. I feel like embedded payments being digitized kind of took off more so even during COVID when people wanted, contactless sorts of things. So what does the competitive landscape look like for you all? Like, what are the different models out there, again, between embedded and then all the various like payment processing and even the more archaic, just manual processing? How would you describe those differentiators?
Yeah, so I mean, I think there's a couple of different vectors related to what we're seeing play out here. Certainly, there is a trend that we're seeing broadly, and this is across markets, but you're likely seeing this as well, where larger and larger businesses are leveraging vertical SaaS. So if we rewind, say, 5 to 10 years, a lot of vertical SaaS platforms had a very solid kind of like base feature set. But as companies grew and evolved themselves, they may kind of grow out of a vertical SaaS, right? There may be things that they needed to do or wanted to do from a technology perspective that were beyond the borders of what vertical SaaS could provide, or most vertical SaaS could provide. As more and more investment, time, really those things have gone into these vertical SaaS platforms, their features and functionality have extended beyond what was possible in the past. And so with that, larger and larger businesses, or as businesses grow, they stay on that vertical SaaS for longer and longer. So where vertical SaaS has traditionally served, kind of like the lower end, or if we go back in time, more of the lower end of the SMB market, we're seeing that move up consistently. And as we look at even, like a 12, 24, 36 month time period, the size of those businesses that are using those software platforms is growing very materially.
Which probably means the transaction sizes are growing, which probably means security is more important. I mean, it's important whether you're an SMB or you're a large enterprise, but when you're talking about a $1 million transaction versus a $1,500 transaction, the stakes are just different.
Totally, right? So the transaction profiles are changing in certain instances. The merchant profiles themselves are changing in certain instances in terms of the sheer number of payments or the volume that they're processing. Because of that, some of the value of different payment methods is evolving as well when we think about, like card payments versus bank payments versus, alternative methods of payment. Another trend that we are continuing to see is that, as these businesses are moving more and more of their volume into the vertical SaaS, they are still wanting to meet their customer, their payer, where they want to be met, right? So when we think about, of course, there are, card present payments and a host of different ways that you can capture card present payments. There are different ways that you can capture payments online. There's the ability to, tokenize payment methods and then reuse them over time for repeat customers or subscriptions or things that have a recurring kind of nature to them. And so, in the same way that you're looking to usually start with solving your customer's problems, right? The merchant in this scenario, vertical SaaS is increasingly in a position where they can also add significant amount of value or time savings to their customers, right? And so in that way, like if I'm a repeat customer, if I need to make payments across multiple people, like we can streamline those activities as well. So it's hard because there are so many ways to kind of improve the financial lives and the cash flows and the operations of these different parties that are involved. So there's a prioritization challenge from a platform perspective, certainly. But there's no lack of opportunity, right? And that's wonderful. That's a position that everybody wants to be in.
Yeah, it's interesting because I think, event companies, they're always looking for ways to provide a client experience, whether it's the creativity they bring to their show, the execution of it. And I think even the experience of payment historically has been an afterthought, right? But if that's just an added layer, especially these event companies that have milestone payments, and again, some of them are doing $1 million shows, some of them are doing, $1,000 kind of smaller thing. But at the end of the day, if you can give them a phenomenal experience beyond the show, that just helps them win. So I think having embedded payments just kind of sets those event companies up to kind of differentiate themselves as well.
Yeah, absolutely. And we are continuing to see how important that experience is for certainly for them, but for their customers as well. And that is, one of the clear kind of enhancements or one of the values of an embedded solution is that you don't have that kind of like jarring, oh, where am I? Can I trust this? Is this what should be happening? Like those, it when you see it, when you're online or on your phone and you go somewhere, you're like, that is not Like, should I be doing this? Does this feel right? We want to avoid any of those feelings, any of those, concerns. And the best way to do that is to provide a really consistent, very clear, very transparent process and flow that allows people to immediately, or even without thinking, just have confidence in the solution and what it is that they're trying to do.
Let's talk about that, because money is such a central part to, all these companies are in business to make money. And when you talk about how they're capturing and receiving payment from their customers, they do want to feel confident. They do want to know that it's not a fraudulent type of thing. So talk to us about PCI compliance and the importance of security when it comes to taking payment.
Yeah, absolutely. So, I think there are a ton of different kind of considerations here, but from a core PCI or SOC data compliance perspective, if you are processing payments, you either need to be an expert or you need to work with a company that brings that to the table, right? Again, we are in the background. We are the infrastructure that's embedded into LASSO and other vertical platforms. But of course, we are PCI level 1 compliant. That's the highest level, right? So that's that has a whole host of requirements that come with it. What we increasingly find, and this is not, while we provide this isn't, we're not the only ones who do this, but managing PCI scope is critically important for a vertical platform. So, whether it's using, say, like a module or a component or some other kind of technical capability that allows a platform to really minimize that scope for themselves and their customers, that is a very wise, technical approach to take as it relates to that card or PAN data. There's a host of other considerations as it relates to, like merchant onboarding and underwriting, and merchants wanting to know, like, we're doing business with banks that operating at the highest levels.
Yeah.
And of course, as a payer, they likely have a relationship with that merchant already. But knowing that, when I enter my card data online for the first time, or when that payment method, whether it's a card or a bank account, is tokenized or whatever is happening, that, this is operating and being managed in a way that I would expect it to be managed, right? So every time that I'm putting my card into, a checkout form or purchasing something online, I have expectations about that. Sometimes I go and do, a fair amount of research on that company. Sometimes I just, believing that that's the case. But certainly we want to put our partner platforms in a position, whether it be related to the, kind of underwriting and qualifying of merchants, or the security at the transaction level, or other events downstream, whether that be related to payouts or refunds or disputes, that we are operating, set up appropriately, and then monitoring and responding appropriately to all sorts of different types of events.
I want to talk a little bit about the underwriting, because when we were exploring different options for embedded payments, one of the things we really liked about JustiFi was the underwriting, the thoroughness of the underwriting on the front end versus when you're waiting for payment. One of our customers, the last thing we would want for our customers when they're waiting for payment, and based on that payment size, having to go through underwriting on the back end when they are literally waiting for that cash to hit. So talk to us about your underwriting process and the philosophy of JustiFi on why it was so important to be more thorough on the front end, because that is unique. A lot of processors are doing it more downstream, and I do think a lot of companies are caught off guard by that a little bit.
Yeah, for sure. I think it starts with just being really, transparent, open, and having a dialogue with the partner platform to understand, what is your customer profile as it relates to payments? What should be expected, right? Because part of this, when we think about embedding it, part of the value here is that, we can set kind of rules or guidelines or policies that are, again, contextual to the platform and the market, as opposed to throwing everybody into the same bucket and saying, okay, now we're going to view them all in the same manner, right? Like a ticketing platform that maybe has an AOV or an average payment amount of, say, like $18 looks wildly different than, say, like the LASSO portfolio and working in the event space, where clearly, like your average payment amount is not $18.
Correct.
So those may be kind of like towards kind of the ends of the spectrum or what we see, but it is to call out, like, look, everybody's payment profile is not the same. And from a fraud and a monitoring perspective, that's really important to consider. Now, on the underwriting side, what we like to do and what we like to talk about is, like certainly there are times when just in time underwriting, or kind of what you referred to as like some downstream reviews, are appropriate. However, we think that has been kind of overused, or a lot of platforms have kind of over-indexed in that manner over, call it, the last maybe call it 4 to 6 years. And so what we would prefer is to have some flexibility, but to be able to have the conversation with the platform as it relates to their customer profile and determine what is best. So what we generally like to do is more skate to where the puck is going as opposed to skating to where the puck is. What we mean by that is we want to underwrite that merchant based on what they expect to do from a payments perspective. So if they expect to process, say, $10 million this year, then we want to underwrite them in a manner that allows us to complete and process and pay out, $10 million of payments on an annualized basis. If they expect to process $100,000, then we're going to underwrite them and the risk associated with that merchant for $100,000. Now, clearly the profile of merchants can change and grow and evolve over time. So it's not that it's always a one and done instance, but we generally take the approach that we want to underwrite a merchant for what they expect to do, and in that way remove or reduce the likelihood of any payouts being impacted once they've been processed, which is to say, like if a payment is processed, it's going to be paid out per the schedule on the platform. Platforms, by embedding or providing these solutions, are in some ways facilitating the movement of other people's money. We call it OPM. When you're working with OPM, then every single step of that flow is critically important, right? Processing the payment, critically important. Batching transactions, critically important. Paying out the transactions, critically important. Providing the reporting to the penny in real time of what is happening and why, critically important. If you are not taking every step into consideration at the same kind of level, you end up with some pretty heated phone calls and emails and other experiences that are really not that fun for anybody involved. So we do take a little bit of a different approach. Obviously there's flexibility. We want to match the policies and the practices to the platform and the merchant. But we are not in the camp that says, hey, let's figure out how we can get the first dollar as quickly as possible if it means that we're going to be forcing a very tough customer experience on them in, say, a week, a month, or 6 months from now.
Yeah, the last thing they want is that payment interrupted.
For sure, right? Like cash flows are super, super important, right? Like it is one thing to say like, hey, this person isn't making the payment. Most businesses know what to do that. You got to go communicate and make sure that you're getting it. Well, once the payment's been processed, then like, wow, if you are waiting several days beyond what that kind of like scheduled payout may be to receive that, like more often than not, some amount of those payouts are being used for operations, like within the next, week or 2 weeks, sometimes, the next day.
What are the variances in the timing of payouts based on if you're using a payment processor through it being embedded? And I'm sure it varies by bank, but like what's the swing of what you see as far as turnaround time for our customer to receive a payment?
There are a lot of different variables involved here, whether it be who the processor or banking partner is, the payment method, whether it be a card payment or a bank payment. The size of the payment can impact the settlement times as well. Generally speaking, we would expect card payments to settle within, and this is in the merchant's bank accounts, the funds are available within their bank account within 2 to 3 days of when the payment originated. For very large ACH transactions, it can take longer. The ACH system is one in which you don't have the same kind of like success responses in real time that you do on the card network side. So there can be more variance there, but nonetheless, with an embedded solution, and this is obviously how we operate together right now, as soon as those funds are settled and available, they are batched same day and paid out to the merchants or to your customers.
Let's kind of go beyond embedded payments. Talk to us about embedded insurance, embedded lending, buy now, pay later, some of the other things that JustiFi is doing to kind of help your platform's customers.
We largely see payments as kind of the primary or the tip of the spear for businesses in terms of their financial product usage within a vertical SaaS platform, right? Like that's the first thing that you have to get set up, that you have to do. And at the same time, those businesses have other financial needs, other operational needs that historically, they've often received from, like, we work with this business for this solution and this business for this solution and this business for this solution. And these may be, products or services. They may also be, like related to their workflow. So like accounting or payroll or HR management or whatever it might be. As vertical SaaS continues to grow and evolve, more and more of those functions can be embedded, just like payments are, within that system. That removes another contract. Oftentimes it's more efficient from a cost perspective. It's way more efficient from a timing perspective, right? It's easier. The experience is better. All the same kind of value props that we've talked about as it relates to embedded payments. The additional consideration is that oftentimes these products, there is great demand for them within the SMB space, but the amount of work or the unknowns related to, will I qualify? What are the terms? What is this? What is the coverage related to this? And now I'm kind of like hopping around from product to product. But some of those questions are like, oh, I could spend a couple of hours and educate myself. Or if you're working within a vertical SaaS environment and that vertical SaaS provider is, I would say like kind of leading the pack here. Well, you're in a position, you can answer all those questions for your customers, right? Yeah. And oftentimes what we see is that it truly is, like a win-win-win insofar as you can bring the right products at better terms to a customer base and provide those to them, the SMB or the end user, at the right time, right? Yeah. This is where the context of these different offers is so important, right? Like, I don't want to go apply for a loan, or I'm not that interested in BNPL until I'm at that checkout screen and I'm trying to decide, how do I want to manage my own cash flows? Then I'm really interested in that potentially. And if I'm, the SMB or what we've historically talked about is like the merchant operating within a vertical SaaS platform, I may not be all that interested in, insurance until I'm trying to decide like, well, do I want to transfer some of the risk from this event onto an insurance company? And what would that cost to do? And what is my, my own kind of risk tolerance or profile right now? And it's not that all of these products are right for every, customer all of the time. But what we do find is that when they are more niche, when they are products that are tailored for that specific, kind of customer, then the value, and this is voted on by clicks, right? Like, do I want it or not? But the value that's provided within the platform at times can be very, very high, right? Like we see opt-in products that can at times be adopted by like more than half of the people that are using a platform. That when you take a step back and think about that, more than half of the people who are offered a product are finding value in it and saying, yes, I want it. The numbers speak for themselves, right?
Well, I think that's how we're wired as humans, right? It's how we buy. We are risk adverse by nature. So if I am paying for a wedding or a graduation or something, right? And when I'm going to check out, I am offered event insurance in case of cancellation or what have you. Most buyers are risk adverse. So it's kind of like when I check out and I'm buying a flight from Delta, right? Do you want to insure your trip, right? I think those are what's great about that is it gives them confidence. It de-risks their decision. And it's also a revenue stream for the event company, which I think is really powerful. You're providing confidence for their end client while also providing a revenue stream for our customer. So I think there's just a lot of good things that can come from that. So I think that's interesting, the direction where the market's going with that.
Yeah, and it's totally, I mean, you're spot on, and it is better together, right? Like those products, when they're right, it's a win-win-win, right? Everybody benefits from them. And, when we've talked with platforms where it's not, kind of like catered or it's not contextual enough to their market, it's not used, right? And so like that's the key here is it's not just putting products in front of people, putting products that solve one of their challenges at the right time. And a platform can do that in a way that nobody else can, right? Which is wonderful for everybody.
Yep, I agree. Well, I appreciate you, Casey, jumping on and kind of helping us unpack embedded payments and the opportunity it really is for the event industry. I think we've kind of hit on a number of things, but, when we think about the advantages of embedding payments within their process, we talked about enhancing the client experience, right? It's easy for them to do it. It gives them confidence when they're making a payment of $250,000, confidence in knowing it's done through a platform that's PCI compliant, secure, all all those sorts of things, and even feeling like it's intuitive enough of a process. We talked about speeding up cash flow, being able to get their cash, hitting their account faster versus doing the underwriting on the back end. Talked about minimizing the risk of the financial transactions, which is super important when we're talking about large dollars. And then last but not least, creating new revenue streams for these event companies, which I think is also really powerful. So I think there's a lot that we're going to continue to keep an eye on when it comes to embedded payments. And we appreciate you jumping on and joining us today to help us talk through it.
Of course. Yeah, it was great to be with you this morning. And I'm sure we'll talk again in the very near future.
All right. Sounds good. Well, thanks everybody for tuning in. Don't forget to hit subscribe. And if you have any feedback or comments or suggestions for us, reach out to us at podcast@lasso.io. Thanks, everybody.